Hey everyone, welcome to our panel, Are Crypto Assets the Way to Financial Inclusion? Very welcome to Oliver Schantin from BaseNode.
Hi, thank you for the introduction. My name is Oliver and I'm the CEO and co-founder of BaseNode. And we had the idea to start this panel because we realized that financial inclusion is becoming more and more of an important topic. And we experienced it firsthand. I can elaborate more deeply later, but we tried to hire freelancers from around the world. First and foremost, for example, from Nigeria. And we experienced that it was a huge pain to send international payments in our traditional banking system. And we realized that a lot of people in this world are actually excluded from having bank accounts. And this is something that maybe the blockchain technology can attack or can tackle this problem. So that's why I hope for a fruitful discussion and maybe a few words about my company before we dive into the topic. So BaseNode is an accounting and invoicing tool. The invoicing is our main feature, and we have developed a web app where you can send crypto invoices. And the special thing about this is that it is denominated in your local currency. It is completely compliant in most jurisdictions, and you can get paid in your favorite token. And this is a short overview of what we are doing here at BaseNode, and financial inclusion is of course part of our mission. And thank you for the introduction, Alex. And now I hope we can get into it.
Sure. Okay. So maybe a few words about you, Maria. We already know each other, but everyone else might not know how deep you're in the crypto hole. Maybe you can say a few words about yourself, about your work, what you're working on.
Thank you, Alex, and thank you, Oliver, for inviting me to this panel discussion on a topic that I'm very passionate about, financial inclusion for all groups of people all around the world. Yes, my name is Maria Eneva Olms, and I'm based in Frankfurt, Germany. In the past 8 years, I've worked in the financial services industry as a technology consultant for banks, asset managers, and insurance companies. And since 2018, I invest in cryptocurrencies. And this year, I started a company called Ecolance that focuses on educational and financial inclusion. The way we do it is we educate people from emerging economies on the most demanded blockchain professions and how to work these blockchain professions and connect them to employers all around the world. Our main motivation is that we want to bring these people opportunities that otherwise they will not be able to access. And of course, big part of it is how to pay these people when they finally have jobs. And what Oliver said is that one of the biggest challenges is that people in emerging economies, they don't have bank accounts or access to financial services. And this is where crypto comes into play and offers a possible solution for this. Thank you very much. I'm very excited for the panel today.
Sure, we too. Okay, there's another Alex on the call. Maybe you can introduce yourself.
Yes, thanks, Alex. Thanks, Oliver, for inviting me. I'm Alex, co-founder and CEO of Satoshi Pay currently, and also co-founder of Pendulum. Satoshi Pay is building payment products on blockchain since 2014, so already since quite a while. We had a lot of experience. Financial inclusion is also within our vision, and we built a cross-border payment service on blockchain. Reached some limitations, which then led to the project Pendulum, where we now build a blockchain that serves all the applications and is connecting fiat and decentralized finance applications. So that's it. I'm very excited about having the discussion, and great meeting you, Maria. Yeah.
Nice. Okay, maybe we should start with talking about what is wrong with our current financial system that leads us to thinking about, might crypto be the way to financial inclusion? So there's clearly a pain point we need to address. Maybe Oliver, you can tell us a bit about your point of view.
Yeah, so we experienced this pain point firsthand. When you try to develop a web app or anything in the software space, you will find that a lot of these talents, especially Web3 talents, they are located all around the world, not just here in Europe or Northern America. And we came across a very talented developer from Nigeria that we wanted to hire on a freelance basis. And unfortunately, of course, you cannot just send a wire transfer over to Nigeria. They don't have an IBAN system, and our German bank account, of course, doesn't allow it. So there is the SWIFT system that you can use, but it costs, $20, $30. You have to convert to the local fiat currency of Nigeria, which, let's face it, he doesn't want to hold either, because it's a very weak currency compared to dollar, for example. And there are third-party payment apps like TransferWise, or in this case, it was called Payoneer. It's like an African version of TransferWise. And then we had to set up an account at Payoneer. And honestly, this was like setting up another company bank account in itself. So they wanted all the documents from us, the notary approved documents in like approved versions. And it was just a huge hassle. And we aborted the process at one point when they kept asking for more documents. So in the end, we have the technology to actually tackle this problem. And the technology is the blockchain, because we built a network of value on top of the internet. And it's super easy and cheap to transfer value over this network. But I think the hustle is that the usability is not really there yet. And that's why right now we are currently paying our developer actually in stablecoin. So we use US dollar Tether or US dollar coin to pay them over the Ethereum or Polygon network, and it works like a charm. So we send the money within a couple of minutes, and it costs a few cents. And the best thing is that these people over there, so there is not a bank in every city in this country, right? It's not that easy to get an actual bank account, but everyone has a smartphone, so they can hold virtual dollars on a smartphone, and it's like a huge win for these people. And that's why when I realized that the blockchain technology is actually solving this problem, but we need to get the word out there. And maybe there are also some downsides to it that we will discuss today, especially when it comes to stable coins. Maybe, I mean, they don't have the best reputation, but so this is the story. This is what inspired us to start BaseNode and to have this panel here. Yeah.
Nice. There is a question from the audience, and it says, given the current crypto winter bear market, how are the responses of employees who are fully remunerated in crypto? Maybe you can talk about that, because you are actually paying people in crypto. And what are they saying about that situation? Because I can imagine it's quite hard to hustle, and then your money just goes. And of course, you are all into crypto because you believe in that, but you have to pay your bills.
Right. So the most of the invoices that are sent and created with BaseNode are not in Bitcoin. They are not in Ether or any other token. Most of them are in stable coins. So stable coins are kind of secure. It depends what the technology behind the stable coin is, whether it's algorithmic, or is it backed by real assets, or is it backed by just a company like Tether? So this is another topic, but these people, they're not exposed to the volatility of like smaller crypto tokens, because as long as the stable coin is stable, which for most of the stable coins is valid. I know there was Terra Luna, but so Tether and US dollar coin are pretty stable, and so they actually can hold dollars. So this employee told me that he is actually, for example, paying his rent in this virtual dollar, and when he wants to spend money, he either converts just the amount that he wants to spend into his local fiat currency, and another way to do it is buying gift cards. He told me that too. So yeah, of course, so these people are still optimistic about crypto, and they are not really they're not heavily invested in like token market or in any altcoins, because they really just use the stable coins most of the time.
Nice, thank you. Alex, maybe you can elaborate a bit about your point of view when it comes to financial inclusion. What problem are you tackling with your projects, and what need did you see on the market, and how did you react in terms of what do we need to develop now to save, I don't know, further problems in the future? And
yeah, maybe following up on the story told, which is interesting. We also pay some freelancers in stable coins, and that works pretty nicely. And doesn't matter so much about the market goes up or down. There's let's say in a hype market, there is more traffic around, so maybe it might take a minute longer, but then that's the only difference. We actually had similar problems actually paying someone, and we already built let's say very early on we built a micropayment service for publishers. So we built that, and that was based on Bitcoin. So we built Bitcoin channels, and we're introducing so-called nano payments for little snippets you could buy, or little texts, or little media files. And the main problem was the volatility for the publishers, and also for other clients, for the ones who are selling their items. And stablecoins were not a big topic at that point in time, and I think that was solved by the stablecoins. I mean, just we have to look at the market cap, and I think it's very nice that everyone can actually exchange any asset to a stablecoin on a crypto exchange if they have access to that, or on a decentralized exchange, also if they want to be not part of that volatility and not take that risk. So I think that's also very nice, and that's already one thing that not everyone has access to in the traditional banking world. So a multi-currency account is already something that not everyone gets. You have to have good relations in some let's say some countries that are not Europe or US, right? So when we talk about Mexico, Latin America, or also Africa, bank relationships and bank accounts is not cannot be taken as a given. I mean, especially when you have a company account. So that's a lot of bureaucracy. There is a lot of obstacles that you need to jump over. And when we implemented our cross-border payment service, for example, we did some 100 interviews with SMEs mainly, so small companies. And there was especially this Mexican companies, they're doing international trade with Brazil, and they don't have access to an international bank account. So whenever they have to send money to Brazil, they have to go to a shop and with cash, and then this money will then be sent through the shop into the SWIFT system, and then somewhere 1 or 2 weeks later arrive in Brazil. And sometimes it also gets stuck. So transparency is a big pain point for them, because you don't get feedback where the money is. So first, you don't know which route it takes. And they told us about one incident where the money was stuck actually somewhere at a US bank. So actually the money doesn't go directly from Mexico to Brazil, but it goes through correspondent banking system, and it can be stuck on the way. And then it's mainly a manual process to get this money moving again. And it's very disappointing, and not everyone can also take that risk. And then the business opportunities are much more reduced for those businesses. So they probably don't grow that fast, or they probably stop trading with some country because they cannot pay the money fast enough there, and so on. So these problems are quite high. So that's the fragmentation, the correspondent banking system as we know it. Of course, for the main geographies, this is solved. So if you move money within Europe, or also to the US between big banks, no problem. But the rest of the world, they have a different view on that, and different access to these stable coins, and also to different assets. So that's how we look at it, and where we want to build an infrastructure that serves specifically also that clientele. So these users that don't necessarily get international banking access with their company. So we're focusing on businesses there. Yeah, they have a little different needs than a freelancer, so they are moving more money. So it's not necessarily $1,000, $5,000 or something. It could be $10,000, $50,000, $100,000, depending on their business they are doing. And then, of course, it gets even more complicated in the traditional, but also in the crypto way. So, yeah, that's the challenges we're currently facing. We are dealing actually with stable coins, so we are not saying that the world will pay in US dollar in the future, because we ourselves have this risk of also US dollar currency or other currencies, because we pay our costs in euro. We don't want to have these additional currency risks necessarily. And some other companies, they're also having most of their costs and business running in their local currency. They also might want to hedge on that currency risk for dollar and euro. Although, I mean, Oliver, I admit that the dollar is probably in most of the cases the preferred currency for those.
Yeah, I mean, it wasn't a bad idea to hold dollars instead of euros in the past year, right? You made like 20% more.
Yeah, which is always the great example, like in the hype market, but then it could also go the other way, right? The same thing, and you just don't want to have that risk, right?
There's certainly a risk, yeah. Mm-hmm.
Nice. Thank you so much, guys. Maria, what is your take on financial inclusion? Why does it matter to you personally? Because you're heavily invested in crypto, and you fell into the crypto rabbit hole, I think, for a couple of years now. And I think you understood something that some people don't, maybe, or maybe searching for an answer, and maybe you are close to it. Because I followed your journey a bit, to be honest, and you have a great vision for what is needed on the market, and you always look out for the people behind the scenes. So maybe you can talk a bit about that.
Thank you, Alex. Maybe I'll give an example, like Oliver and Alex, about what I have noticed right now from the people that I'm working with currently. So the reason why I fell into the crypto space is actually different than financial inclusion. It was because I noticed how more efficient this new banking system of the cryptocurrencies and the blockchain technology could be, because I have worked in the financial services sector for so many years and I saw the benefits of blockchain. But the reason why I think blockchain fosters financial inclusion is because now, since April, I've been working with a lot of people from emerging economies. Ecolens has mainly a community from Africa and India. And I have seen what the blockchain technology does and how blockchain technology can improve the access to financial services for these people. So let me give you some statistics. For example, in Africa, according to formal statistics, around 60% of people are underbanked or unbanked. So like imagine 60% of people in Europe not having access to financial services. What would that do to us? You know, everyone here buys their house with a credit, or their car with a credit. Everyone is using financial services. Like, I don't know a grown-up person that doesn't have a bank account. Everyone receives their salary to a bank account. But financial inclusion in these countries is basically not given, because if 60% of people don't have access to bank accounts, that means that they don't have access to loans, they don't have access to very simple things that we do have access to. And for me, financial inclusion has different perspectives. So on one side, the ease to financial products and services has to be given. So the financial products and services have to be available, easily available to all groups of people, not only to people that have jobs and bank accounts, but to everyone, to the full population. Also, the broad use of financial services that is tailored to different groups of people. So let's say Alex says he works with companies, with businesses. So that means that you have to have certain financial services tailored to companies and businesses, but you also have to have financial services tailored to the little farmers, let's say. And right now, I think this is a very big use case for blockchain technology and financial inclusion in the blockchain space. exactly solutions for farmers. Also, the affordability. This is from my knowledge, from my conversations with people from the Ecolens community. A lot of people do not have a bank account because they think they cannot afford it, or they think that it doesn't make sense to pay a commission to the bank because they can keep their money at home. And what I've heard, for example, in Africa, when you take a loan, you have to have 3 times the collateral in order to take this loan. So of course it doesn't make sense for them. And one of the biggest reasons, I think, that in emerging economies so many people are unbanked is the corruption. And I think this is a topic that is very popular in the media as well, corruption in Africa, for example. I've heard that the Nigerian government launched a lending program for farmers a few years ago. But there were so many intermediaries from the government involved in this program that in the end, the beneficiary was just getting a small percentage of the amount, but paying the full interest on the amount. And then, of course, these people don't trust the system. And the topic of trust is so important in this case. And this is, I think, a very big positive for the blockchain technology, this trust topic. Because if you don't trust the current financial system, if you think they're basically robbing you, of course you're not going to have a bank account, and of course you don't want to use the official system. And right now, what people have as an alternative is, of course, funds from family and friends, or I think they call them lending sharks or something like this. So these are like alternative financial aid. But why people trust them, see them, and they know how they work? Now it's so intransparent that people don't trust it. And this is why I think we have to develop solutions where we foster this financial inclusion. And it could be through the payment side, it could be through offering financial services, but it could be like we do it at Ecolens, fostering connection where people from emerging economies get paid in a different currency and from basically companies that have access to like a trustworthy financial system. But of course, this is done through the blockchain technology. And this is, I think, definitely one of the strong benefits of the blockchain technology. Exactly this fostering of this financial inclusion, especially for people from emerging economies.
Nice, thank you so much. Okay, but why crypto? Because I think crypto is a huge universe of different options. So maybe we can pick some aspects of that and discuss if there are any downsides. Because from what I've heard now, it's like all shiny and glittery, the world we are slipping into. But I guess there are a lot of people out there saying, okay, why crypto? Why should I trust that then? I don't know. Who wants to take on this? Alex, you're lovely.
Yeah, I can definitely tell also a downside. I mean, there's upside and downside mostly together. So as you said already, in Africa, cash is very, very relevant. It's a big security issue, of course, because you can get robbed, of course, right? You have to like make these handovers and so on. So it's a big thing, but also you could say, you only need to have your smartphone then and not a big chunk of cash anymore and traveling around with cash. But of course, then you have the security issues. And I mean, we are reading about this every week now, that there is some hack and on a bigger scale on crypto. And I think that's definitely one big issue that, we probably need to address when it comes to financial inclusion, because then we probably speak about some solutions where there's no custodian in between and people hold their own crypto. I mean, depending on which crypto we mean, right? So rather there is one that is responsible then, and you can probably sue when your money is gone and get your money back. But usually in crypto, when the money is gone, then it's gone, right? So that's, I think, biggest downside also to come and transform, or let's say to build the trust in these communities, and also in with these users that are not so into crypto like us. And I mean, they hear the money can be gone tomorrow, or you need to be aware where you click on your computer. And it's a complete new education that you need actually to keep your money safe, hardware wallets and so on. It's very different from the easy, let's say, hiding the cash somewhere, probably. So I think that's definitely one big downside here. And not so sure about the solutions. So it's pretty difficult to solve it also. I mean, if you have any ideas, shoot.
Yeah, super interesting what you're saying. Can I maybe just jump in there? I also think that trust is the main thing that we need to build, and crypto can be a little bit scary at first when you first get your first touch point with it. In some of these countries, it's not that so. Okay, you hold your money in cash, you put it under your pillow in your house maybe or something, and then you feel like it's safe. But you have a choice of getting robbed too. I mean, you're getting robbed in a different way. If I look, for example, at Iran's currency, it lost 70% of the value just this year alone, if I'm not mistaken. So you have your money under your pillow, but you're still getting robbed. But it's more subtle. It's a different kind of robbing that's going on. And yeah, building trust is so important. Like, imagine you are like receiving your salary in Terra US dollar, and you are so happy that you get US dollars, but we all know what happened to this stable coin. And so maybe what we need is to make sure that people are comfortable with no intermediaries. Or, I mean, Alex, I'm probably running into open doors here, but if I think of Bitcoin, it's probably, yes, very volatile, but maybe even easier to trust than a stablecoin issuer. Or yeah, just like one thought of mine.
Yeah, and I think if we compare Bitcoin's price volatility to inflation, I still think it's the better choice to go for Bitcoin, because, you know, it's, I don't know, there's even a chance of winning. And if you see it, inflation, it's like, okay, I'm definitely losing. So there is no, from my point of view. But I think, yeah, education and onboarding is a huge problem, because I think it's nice that we see so many people using crypto and actually wanting to be paid in crypto, but often they can't spend crypto. Often it's a huge trouble to have a wallet and to take over this huge responsibility for your own financial security. And I guess, I don't know if you're not a techie or a nerd or something, it might lead you to one or another loss there. I think there's a very interesting question from the audience. Do you see DeFi removing the burdens placed on credit unions in small islanded states due to the requirement of correspondent banking? I guess DeFi is another crazy world where a lot of stuff is happening. And yeah, if we want to talk about financial inclusion, maybe we should talk about DeFi a bit as well. Maybe the role of DeFi. Who wants to talk about that?
Can you repeat the beginning of the question again? I didn't.
Yeah, that was
sure.
a very long question.
Yeah, don't
Maybe
worry, it is a very long question. Yeah, sure.
Talk about this.
For me, the sound is breaking up. I don't know.
Yeah, I think we lost her. Okay, in the meantime,
No, but Alex, maybe you can repeat the question so everyone hears it again.
Sure. Do you see DeFi removing the burdens placed on credit unions in small island states due to the requirement of correspondent banking? So I would wrap that up into how can we use DeFi in terms of financial inclusion? Maybe just a bit wider aspect.
Okay, can you hear me now?
Yeah, now we can hear you.
Okay. I spoke to a very interesting gentleman yesterday building a DeFi solution for farmers in India. Maybe I can give an example with this use case to show how DeFi could help. So first, what is DeFi? DeFi is decentralized finance. So having access to financial services without intermediaries, without banking. So the way it works is that the farmers, his solution, the farmers bring their crops to a warehouse. This is the standard procedure anyway. In this warehouse, the employer is trained to scan the crops and determine how much, so what's the amount of the crops delivered. So these crops, then the farmer gets a receipt for the amount of crops he delivered, and then he can sell the crops, or he can collateralize the crops. But where the blockchain technology comes in now is that this receipt is transferred to an NFT. The farmer doesn't know how this works. He's not involved in the process or tokenization process. He just receives his receipt, but this receipt is also an NFT. And now with this receipt, he has a completely different access to financial services than he had before. Because what he had before is just a receipt for the amount of crops that he could go to a bank and get a loan or get paid if he sells the crops. But now he has this NFT and he could do other things with the NFT on decentralized platforms. So I think this is a great example of how DeFi can come into play in a standardized process with little difference. We can foster financial inclusion. And if I come back to the question of education, this is of course the first step to it. But in the end, do people really have to know about everything? Do really people have to know how the technology works? What type, like for example, liquidity pools. I'm using liquidity pools as one strategy of my DeFi strategy. And to understand really,
I'm sorry, hard to understand.
I can't hear.
Is of course important if you're trying to make money with it.
Sounds like
sounds like a robot almost.
That sounds like crypto now.
Okay,
we probably need to reconnect Maria.
People,
we need to kick her out. I don't know. No, doesn't work.
Maybe.
Okay.
Yeah.
Okay, sorry. Maybe someone else has to take the question, and maybe my connection is not.
No, but I would like to add to this. This is a very interesting point that you're making.
I will.
Maybe you can try. You can finish your story when your connection is a little bit better. But so I think you don't have to know how a combustion engine works when you drive a car, and you don't have to know how the internet protocol works when you upload a video on TikTok, right? So, and the same thing goes for the blockchain technology. And I'm really curious. So I think, or maybe this is a provocative question too, in order to understand the risks associated with the technology, maybe you do have to understand it, or you need someone who is like taking some risk from you. But then we have again some man in the middle that we actually wanted to eliminate with this technology. So this is a little bit of a conflict. Or what do you think about this?
Yeah, I can say something to that. So it's I think with UST, you mentioned UST went down, like a multi-billion-dollar assets just evaporated, right? I mean that doesn't happen too often, right? So it's I think it's a big learning also of the industry. We when this kind of stuff happens that we are still early in the phase, especially with these stable coins. You named them algorithmic stable coins, and there was always a big question mark. Do they work? We don't know. We'll find out. Apparently, they don't work. So we learned that, and I think there will not be a let's say the next stablecoin experiment or whatever will not be as big. It will fail probably earlier or won't get that big. I think it's a learning that the whole industry and the whole users are doing, and looking at the farmers then using blockchain at one point. I think then the products matured long enough so that with more people using it, then it gets also more secure. So adoption will also drive and solve partly that problem, I think. Because already, if you look now at the top tier DeFi protocols like Aave or some other Curve or so, there was like very little chat about security and very little about any hacks. So you already feel kind of safe in your Aave account when you put your money there. And it is already checked by a lot of people who also try to hack that, of course, and so on. So you have this security at one point. And I think that's how it will solve itself. I don't think we will educate farmers how crypto works. I fully agree there. That's probably not possible, or it has to go. Otherwise, they don't have to understand how the engine works, right? So
there's probably also a market for like people who facilitate this. So maybe I just want some yield on my coins, and I don't know about liquidity mining and all that stuff. I don't want to spend the time to learn about it for hundreds of hours to feel secure. So I can just give it to a service that will take maybe a fee, but I still profit. Maybe there's a market forming like that, but then we are also a little bit back to this whole issue with, like, I mean, for example, the Celsius platform seemed also very safe up until it was not. So that is, it's an issue to overcome, and I don't know what the solution could be.
Yeah, let's not call Celsius DeFi, right? Because it was,
okay.
I mean, not really. I mean, they were manually investing in DeFi, maybe, but it wasn't a protocol, right?
No,
they had a token, I think, but it was not. Yeah, I agree that it's really more CeFi.
So
Maria is back.
Super.
But we still don't.
Audio. Yeah, one additional comment regarding the role of DeFi, what this is playing in financial inclusion. So what we experienced, and that's why we started building Pendulum, also because we wanted to solve the cross-border payment challenge without DeFi. So we needed market makers to onboard them to work on a blockchain to actually do currency exchange. We needed a lot of liquidity there. And with the DeFi innovation coming in, mainly initially the DEXs, like the AMMs, automated market makers, and of course also the liquidity with the liquidity incentives that were distributed, and also the opportunity, and that's sometimes forgotten. So it's not only the user perspective, but the user can actually now really become and take over some banking services themselves, right? So they can provide liquidity, as Maria pointed out. They can lend money to someone for an interest rate. So I think that's a big changer again in financial inclusion. For us, it kicked out more intermediaries, which also are problematic when you want to decentralize a service. But on the other side, what I want to mention is that the users were able now, it's like somehow the Web 2 development, right? When users become creators, it's kind of the same thing. We see that users are now becoming financial service providers and earn money with that also, right? Which they couldn't before, which is again an inclusion topic, I would say. Coming more from the business perspective here, I see. So Maria, we are very curious about your story, I think.
Okay, what did you hear? Did you hear the story about the farmers in India?
Yeah, definitely.
Yeah, so the receipt is an NFT. That's what I got. But what happens after that?
So basically with this NFT, they're able to collect.
Maybe Maria, if you switch off the video.
It or sorry?
Yeah, we can hear you now.
Do you hear me now?
Yeah, now it's perfect.
So, okay, let's hope the connection is better now. Yes, so with this NFT, you can basically, sell it or collateralize it. And you have then access to to international buyers or to international markets without having to use the intermediaries in India. So basically, it eliminates the intermediaries that you would usually have. And this is how it gives you access to decentralized finance. This is the innovation here in the whole process. And what I wanted to say as well in this topic is that I don't think that everyone has to really understand the technology behind it, or what an NFT is, or how to create it, or something like this. So you don't have to be a techie, you don't have to be a financial services person. You just need basic understanding of your new opportunities that you have with products like this or services like this. So this is the education I think people should get. Very practical, hands-on education about the new opportunities that they will have with decentralized finance, with cryptocurrencies, and with the blockchain technology.
Did we lose her again?
No, I'm saying
okay.
yes. So basically, I finished. Yeah.
Okay, perfect. I thought we were losing you again. So I was like, okay, is she saying something? Okay, awesome. Thank you so much for that. When we talk about adoption and making crypto mass useful, so I think financial inclusion includes as well that you know what finance is and you have to know how to use crypto. And there have been some questions from the audience regarding that, because it's quite hard for a non-crypto person to get into crypto and to choose who to trust. What coin is safe? What is a scam? So basically, you don't have to figure out what is a wallet, blah blah blah. No, that's not enough. On top, you have to have a very deep understanding about the financial system and the crypto system as well. So I think when we head into direction of financial inclusion, we pretty much need to solve the issue of education, because I think that's the very base of everything we're talking about. And to be honest, I'm into crypto since I think 10 years now, and I still don't see that kind of education out there. It's education for crypto people, but there's no education for no crypto people. It's just a vague impression of how scammy the whole system is. I don't know, to prevent maybe people from really using it. But that is just my take, and I don't know what you think about it, but the audience had some questions regarding that as well, and maybe you have a nice opinion on that or an interesting take. Who wants to speak? Oliver, you've been quiet. It's your turn.
Yeah, so the question would be that like what can be done with education in the crypto space, and whether that's the thing that we should start right now, or maybe you can rephrase the question just in one sentence. Sure. So
you weren't listening. No, was a joke. Okay. No, maybe the question is, how much education can we provide in what short period of time to really make financial inclusion happening fast? Because I think education is missing on several points here. And I think it's a huge part when we talk about financial inclusion. Do people know what they do when they get into crypto? How useful is that really when they don't understand finance, when they don't understand what is a crypto scam? And I think it's quite risky to think about crypto as financial inclusion when there is such a huge thing like education on that missing. And of course, we are all crypto nerds. We don't really know how it feels like to look upon that bubble. But maybe we can have a look like from inside the bubble to outside and have a look if financial inclusion is actually something real when we're lacking basic education about our financial system.
Okay, that was another very long sentence. I'm sorry, that was just very long. But okay. I think I get it. So the point is that
I was already rephrasing. So
okay, thanks. So the point is, on one hand, usability, right? So because it can be scary to set up your own wallet, and for the first time maybe in your life be completely financially responsible with your money, and if you lose your password, no one can help you, right? So this can be scary, but it can be very powerful. And in the end, it's a trade-off that people are doing, right? So, and I think not everyone wants to hold their own keys. So we need to educate people that this option exists. But if I look into, let's say, the people who fell down the rabbit hole further, they are all about self-custody. Like, oh yeah, I got this hardware wallet and I like use a dice to roll my private key or whatever. So it's very advanced stuff, and it looks scary to people from the outside that see that, and they are like, do I have to do all this just to be like secure in the space with my funds? So one point will be user interfaces that are super simple, which we are also trying to build at BaseNode. But in the end, even if you use BaseNode, you have to have your own wallet, right? We don't hold any funds, and I don't know how we can really overcome this. It's a tough question. Education on one hand, yes, but I also experience that people who are deep in the crypto space and they meet no coiners or pre-coiners, or how you want to call them, like people that are not in the space, they can be pretty hostile sometimes. They are like, if they explain to you something and you don't get it the first try, they're like, okay, this is maybe not worth the effort and so on. So maybe the community should be more open in general. I'm not trying to generalize here, because I mean, there are always other examples, but yeah. It's a tough question. Maybe someone else has also some ideas.
Maybe I can say something about it. I would make a parallel to the traditional financial services world. So I went to a lot of events, let's say for women, how to invest in shares, how to analyze shares, how to get passive income, and there are all these banks and financial services providers coming that are trying to sell you something. And, this is also scammy, also in the Web2 world, basically. People are always trying to get your money and somehow profit out of you. And it is in your own power to get independent education in order to really understand how it works and to understand the system. And even in the Web2 world, we are responsible for our financial well-being. So I think it's the same rule in Web3. Just educate yourself from different sources, independent sources, not providers of financial services or I don't know, crypto platforms for DeFi or crypto exchanges or something, but something independent where you can learn about this new financial system from an independent provider. I think this is the best advice we can give. And of course, what Oliver said, don't be arrogant to people that are new. Try to explain as easy as possible and be open-minded. This is what I can say about this.
Nice, thank you so much. I have the very same impression that Web2 finance is even more scary than crypto bubble. And I guess that was a very nice sum up. Thank you so much. Yeah, I've been thinking about, if we talk about financial inclusion, we don't really need that. We have the nice fiat system here, which is working, maybe not well, but it's somehow working. So when we talk about financial inclusion, we're talking about other countries than maybe Germany or countries in Europe, maybe, I don't know. But what I've seen in Canada, for example, with the truckers' protests, that was a tiny piece of time where Canadian people needed financial inclusion in terms of crypto, especially Bitcoin. So I think we're maybe not the right people to really have an opinion on financial inclusion because we don't need it. So we are basically working for a world for others where others are in need, and we do see the need there. Maybe we can talk about what kind of financial inclusion in Europe we do seek or we do need, and what is lacking there, because I see a lot of examples from Nigeria, and I don't know who was talking about another India, of course. Yeah. So yeah, this is far away, for some of us. And I think there are maybe a few examples actually happening in Europe. Who wants to say something?
Yeah, I can kick this off. We had discussions here with a foundation in Berlin. For example, if people come from elsewhere, I mean, it's again the other countries to Berlin and then opening a bank account and so on, and getting set up is difficult. And there we have the same problems actually of financial inclusion inside Europe, because I think it got better now, but it's still very, I mean, restricted, or there are more obstacles to overcome when you're not, let's say, from Europe or European, right? But it's again not an example from myself. I mean, we're very privileged living in Europe here, and if I look at, let's say, our level of financial freedom, it's already pretty big. But I would say it's a luxury problem. It's still an optimization problem that is solved. For example, a friend of mine, he tried in the traditional world to borrow money against his stock portfolio, right? And it's kind of a horror if you do this in traditional finance, like a lot of bureaucracy around this. Forms to sign, I don't know, signatures to do, checks that will be done manually and so on. And I mean, we don't have stocks yet on blockchain, but there's legislation around it, and it will definitely come. And but looking at just the normal borrowing lending protocols, how they work in DeFi, working with the collateral and liquidation, that's already a huge, I think, a big example where you see that this composability and open interfaces really make a lot of sense and bring, I wouldn't call it financial inclusion, but bring this topic forward on a let's say in a higher optimization level, so that we also have access to more liquid money, and liquidity is flowing more optimized, and it's not stuck, let's say, in our TradFin accounts, right? Trad finance accounts.
Yeah, maybe I can also jump in there. So financial inclusion in Europe, I was thinking at first, well, we don't really need it, but then I came across some things that actually I experienced in my friend group. So one of our flatmates was from India, and you won't believe how hard it was for him to get a German bank account with a German banking card. So for a lot of services, you need a credit card. You want to rent a car. You want to use some online services. I mean, of course, you can pay cash, but if you want to use stuff in the virtual world, then you most likely need a Visa or MasterCard. And it was almost impossible for him to get an approval. And the same story goes not just for people who move here, but for people who are actually maybe even born here. There are people living in the street, and if you don't have a postal address, good luck getting a bank account in Germany or in any European country. The only way those people can save money is in cash, and that's quite risky because if you don't have a home, it's easily stolen. It's much more secure to put your cash on a wallet, on a smartphone even, because it is locked, it is digitally secured, and it's more safe. These are some examples that I came up with.
And I can give an example with myself. So I come from Bulgaria, but I work in Germany. And 3 years ago, I wanted to buy an apartment in Bulgaria, but I'm not eligible for a loan because I don't have income there. So I guess it's the same in Germany. If I don't have an employment contract in Germany, I would probably not get a loan. So this makes it extremely narrow the opportunities how to get a loan to buy real estate. Let's say I might be employed in England or whatever, in some other European countries. I don't have to be from outside of the EU even, but I still am not eligible for a loan. And this is of course a limitation. I wouldn't say that it's the end of the world, of course. It's not like I don't have access to financial services, but in this case, I do not have access to a loan in my own country of origin because I don't work there. So yeah, this is a very fresh example from a European country.
Yeah, I think borrowing and lending is actually a big example on a larger scale. I think smaller companies have a problem in Europe still get financing, although they have collateral and they have a good case. But then their so-called house bank just says no because there's too much risk, and then they're kind of stuck in that system, right? Because moving banks, they need a new track record and so on. So it's a big overhead. I think this is solved also by the marketplace kind of borrowing you get in crypto. Centrifuge is a big example, trying to put that offline to online, right? I mean, to on-chain lending. So there's some stuff happening. Still not feasible, I would say, for a non-crypto small company that wants to get some financing tomorrow. But yeah, on our way, I guess.
Yeah. Nice. What do you think? What is more important when we talk about financial inclusion, stablecoins or crypto assets? Who wants to take on that? Oliver, because I think that either way our society will change a lot. And if we're on the stablecoin track, it might change differently too when we're on the Bitcoin track or something.
Yeah, so when you say crypto assets, you probably mean Bitcoin mostly. So, I mean, stable
I didn't
coins.
want to say it like that.
Okay, so stable coins fulfill a super important purpose right now because most people don't understand Bitcoin yet, and what they want is dollars. They want the king of fiat, so the most stable fiat currency, even if that means losing 9% a year in purchasing power. It's still better than all the other fiat currencies. And so I think there is a justification for blockchains that might not be so secure like Bitcoin, maybe, that do have man in the middles or service providers built on top, but they fulfill a purpose. And this is something that people understand. Everyone understands what it means to hold virtual dollars on your phone. If you think in Satoshis, that's nice, then you're further down the rabbit hole, and maybe you are even right in the end, but it's such a long journey to educate people about that. So yeah, my answer would be stablecoins right now.
I would like to actually mention El Salvador here, because I think this is such an interesting thing about financial inclusion, what El Salvador did. So a lot of people are saying that their president is crazy, but maybe you have to be crazy to do something like this. The way he wants to make financial inclusion possible and basically to give his people or his country this upside of earning, because they are one of the poorest countries in Latin America, right? So he wants he introduced the Bitcoin as a legal tender, as their official currency, with the hope that by using Bitcoin or holding Bitcoin and appreciating in price of the Bitcoin, people will get richer. So this is his way, I think, of offering financial inclusion. And I don't want to talk about now how like what's the upside, what's the downside, but I think this is a very brave move. And this is, I think, a good alternative if you want to take some risk.
Yeah, true. That's so nice. So we have been hearing about financial inclusion in so many different shapes, I guess. It's a huge field to talk about. But one last question maybe from my side, because I'm pretty much interested about how society might change in terms of when we change our finance. How do we change as a human being? How do we change as a human society? So if we talk about financial inclusion and all the unbanked, underbanked, or even overbanked people out there, what might the future hold for us if we really are into financial inclusion through Bitcoin or any other cryptocurrency?
Yeah, I can go first. So yeah. I would dream of a world where every human being can transact, nonetheless, if they are behind some imaginary border lines between countries or something, they can just transact on a voluntary basis with each other be in custody of their own assets that are mostly digital. And yeah, I want that. So this is what financial freedom also means in a way, not in the sense of having a lot of money, but in being able to transact and exchange goods and services with whoever you like without needing to ask permission. So this is really something that I hope the future will bring.
Nice, thank you. Someone else, the last words.
Yeah, I'm joining on the vision. So let's say a world where there's no obstacles, no friction of having this freedom to choose how I want to store my money, where if I want to invest, I connect it to the, let's say, global also markets. If you want to buy some, I don't know, American shares, some South American shares, some Chinese stocks or whatever, or if you want to invest in Bitcoin or any other coin. So there should be, it would be great to have this freedom, financial freedom for everyone, also that people can gather around and just found a company and have the opportunity without the obstacles of first what they need is having a bank account. So that will be great. I think we'll see a lot of creativity and a lot of inspiration materialize on that road.
Yes, thank you so much. Well said. Okay, we're at the end of our talk. Thank you so much, everyone. For me, it was super interesting. I learned a lot. And I hope everyone else too.
Thank you very much. Thanks for having me.
Thank you, everyone.